Testing, testing. All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Just got to fix my little drawer here. It's a mess. Doesn't matter. All right, rock and roll, guys. It is Thursday, September 22nd, 2022. Welcome aboard to the YouTube channel. Let's go over the market, shall we? Dow futures up about 65 points. Big turnaround, or nice turnaround from yesterday. We hit the lows yesterday. I think we were down about 220 points at the lows overnight. Nasdaq is slightly green. S&P up 0.14%. Russell 2000 futures up about 0.19%. Crude oil is bouncing. Right now at 84.80. Again, we've been stuck around that 85.90 range for the most part. $2.48 for gasoline futures, up about 3% this morning. 10-year yields continue to climb, 3.587 after yesterday's fall to around 3.5 on a 10-year basis. The dollar, we're going to take a look at that here in a second. It is flirting with break even, 110.69. We hit as high as 111.84. Let's take a look at the VIX, down about 1.93%. Pretty much stuck in a trading range currently at 27.45. Copper futures are up 1%, so commodities are getting a little bit of love with the dollar coming down. We're going to talk about the dollar here today. The euro dollar, 98.74, still below parity, up 36 pips. Dollar yen fell 317 pips with a BOJ, Bank of Japan, intervention. What exactly is that intervention? I tried to look. I have no idea what intervention they're doing. Is it going to be buying more yen denominated bonds, maybe? That seems to be the MO for the BOJ, or Abenomics, for those who remember about 2014, 2013, 2012. But again, that was the head of the economics in Japan. I think it was the central bank leader, Shinzo Abe. He passed away this year, if you guys remember. So Abenomics is still shining upon us from above. Bitcoin futures up 1% this morning, 19,170, even with yesterday's fall and volatility. Ethereum 1.4% to the downside, 1302. And that is where we are this morning. Let's go ahead. I don't know why my CNBC is not working. Let me see if I can log in again on my TV. All right, let's go ahead and start with the dollar first. The dollar is the first thing I want to look at. And the real question I want to ask this morning is how oversold or how long can you be oversold is the question. And again, I'm not one to just base everything on RSI, but again, RSI readings do matter, obviously, like moving averages, Fibonacci's, again, depends on your indicators. But again, we can go and take a look and see the last times that we've had that oversold condition. We've had a nice little rally, at least in equities, with a drop in the dollar. So again, you could see that we did flirt with that 70 oversold level on the daily, came back down to around 62. If we go ahead and bring it to a smaller time frame, you could see we were right there above 70 on the hourly and came back down. Now the question is, where can we go with the dollar? If we can get to around 110 and a half, 110.27, equities are going to benefit from it. So that brings up us to S&P futures, and a very, very weird time to look at it. So we're going to go ahead and take a look here at a couple of things. Let's go ahead and just take a look at the chart here. We did fill a gap on S&P spot, which is SPX. And again, you could see the last time we were right here, right around 37.40. Let's call 37.40 the next support, if anything, and then your next resistance would be around 38.44 short term. And why do I say that? Bring up the hourly, and you could see right around 3,900 again, that key level, 38.44 being the first resistance. So again, what I'm looking for here, again, unless we break below 37.45, and then that right there, once that breaks, you have to target the lows of the June lows. So that gets us here. I think I have 38.45. Let's go and place the alert here. We'll place the alert at 37.45. I had an alert at 37.39. Let's go ahead and cancel that alert. 37.45. We're going to cancel that alert. Okay, so 37.45. That gets us back to the last time we kind of had a ping pong double bottom here, right around the end of May and into July, or excuse me, end of June into July. So again, 37.50, 37.45, that's pretty much your last stand in terms of hitting that June low, which is 36.39. So again, that's still about 110 points away. I mean, would you want to short there? Again, that really depends on a lot of indicators and where we're going in terms of price action. But again, short term, there's a question here. It feels like a small pop to short. I think we get that small pop, but I agree it could be a short setup. So again, what we're looking to do here, again, if you are looking for continuation, at least to get to around 38.44, really the level that you're looking for anything to actually make sense would probably be around 3900, and then there would be the previous support, which is now resistance. 38.44, we sliced through. That was a triple bottom on the 4 hour. We'll bring up the hourly to show you, and you could see 1, 2, and 3. So that was your support. Now that's your resistance. We're kind of flirting with it. We're about 40 points away, 30 points away. Nothing to get too excited about. But for the most part, again, 39, 38.44, and then you could take a look at 390 or 389 on SPY. That would be your resistance there, and that's where pretty much you want to short if you expect the rollover. The thing is that we're still kind of moving into that seasonality pattern. And again, the dot plot with the Fed, I talked about that yesterday. What's the point of a dot plot if you're really just that dependent? So again, now we got to see if CPI in October, PPI, actually come in better so they can flip up the actual, what is up with my TV? So they can work on seeing if we do get a soft landing or a pause of some kind. Who knows? That's just going to be one of those things that we just have to wait on. So it's going to be a lot of waiting today. Again, let's see the price action. I expect some kind, again, overbull. I know you guys are going to give me so much crap, but again, when you have this kind of fall here, again, more than likely you get a relief bounce short term, somewhat. Again, I'm not saying we're going to soar 200 points today. We could. Again, I thought we would get to around 4,000 this week. It's still a possibility, a long shot again, but 38.44, 37.45, 100 points right in the middle. That's pretty much the line in the sand of what we're looking at. Again, not a lot to look for today. Let's go to the volatility index. Again, we did pop above 30, but again, 28 seems to be that resistance on the 1 hour. So far, kind of holding pat. Not exactly, anything bearish or bullish. Only I could see here is on a 4 hour chart, you do have a little bit of an inverse head and shoulders that popped to 30. But again, right now you could see that we're pretty much just kind of stringing along here within this parameter here for the most part. You could see just kind of a channel between 28 and around 23. So say 5 points on the VIX. So not a lot of edge here anyways. The dollar index we spoke about, again, look at that breakout, of course, on every single time frame. We've been talking about it now forever. The next Fibonacci retracement level based on the last chart on the monthly chart, let's just say, or weekly, multi-decade, 114.76. Could we get there? Sure. But again, we have to wait and see. So we need to root for the dollar to keep going down to help commodities and help risk assets if you are a bear. If you're a bull, if you're a bear, you're hoping the dollar continues its breakout because that's what it is. It's all about the dollar now. Now, the dollar could create something to break in the markets. Again, a stronger currency among emerging markets is going to hurt their equity markets and hurt their currencies. That's why the BOJ is intervening. Again, how they're going to intervene, I'm not sure, but you could see how the yen is stronger than the dollar today, about 290 pips worth. So let's see if other countries do the same, other central banks, but it is a central bank theme market because it's really just to kill inflation. And that's what we got to do to get things back on track. The good news is that the dollar is pulling back even after a very hawkish Fed. The only thing is the yields are going up too. So again, we need a happy medium where yields come down and the dollar comes down and equities come back. So that's what we're looking for. I thought 3,900 was the bottom. That was my call for the bottom. We're at 38.08. I moved it after we got that nice little bear rally. But again, we're about 100 points away. So again, I have not really put tons of money to work other than trading. But 3,900, that was a key level. We finally broke it below it. A very, very protruded breakdown from the Fed. And we'll see where we close today. Could we recapture 3,900? Possibly. We'd need a nice run today. Let's see if we get it. Levels to add Google. Yeah, I was looking at that yesterday. Let's take a look at it. Google, I have 97.79 on my chart. That has not broken yet. We got to around 99.06, but 97.709, that is your gap fill on the daily. That I will be buying on Google. That's what I'm really waiting for. So that's one that I really want. NVIDIA has 120.66. It's not there yet, but Google at 97.79, I'm a buyer there, even if we continue there. I think we retest the June lows by next week, and definitely could definitely happen. I can't disagree with you there because it definitely works out. How about this? Look at the daily on S&P futures. Now we're talking about the 200-day on the weekly. Take a look at this, 35.82. I mean, that's definitely a possibility if we break the June lows of 36.39. And again, based on seasonality patterns, we should at least have more downside towards the end of September and October. We flip to green or flip a little higher. Again, let's see if that's the case. It's not going to be perfect, may not even work out exactly. Maybe this is the analog of 2001 or 2008. That could be a possibility. So we just need to wait on that as we go. In terms of market action, I mean, it's pretty mixed. We were up 100 points on the Dow this morning. Nasdaq's now red. Russell just went red. Commodities are going up with a weaker dollar, at least with oil. But if you're looking at crude oil to trade it, you're really just scalping it here because not much is going on. The only thing that's good about the energy market is that the energy refiners, the stock companies, are holding up better than everything else in the S&P. So at least that's something to hold on to. But you could see that yellow line that we created months ago, we're still hanging around 85. Nothing really going on here. So if you're an oil trader, it's pretty much tough sledding. If you're an equities trader, it's really a binary market, as we know. Up or down 1% almost a day is what we've been getting, just volatility. Now, the question is, could we retrace this yesterday's move by the end of the week? That's really the target for the bulls. They need to get to 3,900. And if you're a bear, you're rooting for right here, 37.48 to short to the June lows that you were talking for. In regards to the VIX, really the level you're looking for is 30. That was the wick high from yesterday. Could we recapture 30? That'll get us back down to that S&P level of around 37.71, maybe 37.45. And at that point, do you want to short here to 36.39? I think you'd almost have to, at least to hedge your bet, or at least hedge your portfolio. But here, I mean, you can make some money selling calls. Again, if you think we're going to bounce, selling puts is another way. But right now, again, just a breakdown of this trend line here. We had that break. We had 3,900 holding. Now we're at this little support here. The question is, what is next? TNX is going higher. That's the 10-year yield. That's right. 10-year yield right now at 3.6%. So again, that's going to kill demand for mortgages, but that's going to be great for savers who have a savings account with interest-bearing accounts. We'll see what we get. Again, you really have to the point now, 3,900 or 37.45. That's really the two levels. If we're looking at SPY, it's really 390 or right here at 372.44. So let's put an alert there at 372.44 with a 390 level to break above. Let me see if I can see where that is. Yeah, I guess 3,900, 389. Yep, that's what we're looking for. If we're going higher. If not, then we need to get to 372.44. So that's another $5 to the downside. We have to see the dollar. That's here the focus. If the dollar can continue to get down to 110.27 and lower, equities will rise higher. If we get a boost back up on the dollar, equities are going to go down. Simple as that. We'll leave it there, guys. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Have a great rest of your day. Cheers, guys.